Markets sold off yesterday as FOMC minutes signaled a hold-off from increasing monetary accommodation. Commodities were hit hard as their intermediate downtrend continues. It's all about ADP and Jobs Friday. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the morning call. Yesterday, stocks got hit pretty hard with the FOMC minutes. They kind of indicated that the Fed would probably, not be more accommodative in their policy. I can't speak today.
It's been a long week.
But so the stocks were able to rebound at the end of the day, but they're trending down today. What are you thinking? What does this mean?
I actually wish that the market did not rebound in the last hour of the day because, you had weakness throughout the day and then we accelerated to the downside after the Fed minutes. So right there, a lot of people were probably positioning short. I know for myself, I got stopped out of a lot of longs. And then in that last hour that we rallied back, people were like, oh my goodness, not such a big deal. We're going to resume the uptrend that we've been following for so long. And then guys even covered their shorts. So they're coming in today, we're down 11, 12 handles. So now guys don't have their shorts. And some people who bought back longs like, uh-oh, what do I do now? So it makes it for a very frustrating trade. That's why earlier in the week, I'm like, let's get off the throttle. The market has a lot to prove. And right now it's proving that we might have a different composure in second quarter, more to the weak side than obviously the gains that we saw in the first quarter.
And today we get ADP jobs numbers. Friday, it's going to be all about the big jobs number, payrolls. So how should traders be thinking about that today?
Well, it all depends on where we are when we go into it. Now today, we've been trying to hold on the U.S. recovery. We're trying to grab on positive data. So the ADP could help us this morning. If you look at the chart of the S&P, you will see we're getting kind of close here to breaking that intermediate trend. Here is the macro trend that's been intact. I like to show it all the time. So if you're a macro investor, you're not even breaking a sweat. So as far as the intermediate trend, okay, here we are. We broke. This was your gap and go. We tested it right here, and then here you are right there. And then this upper momentum trend got tested yesterday. We bounced off it, but we're opening below it. So if this market early on cannot take back, just say this, 1404 area, you're going to see a move down to this 20-day moving average, which is right around, it stands at the 20-day is 1397, which we're about opening at. And then obviously the major line in the sand is this floor going sideways here, and that takes it down to the level of about 1386. So as a trader, I'm coming in writing down a few different levels. I'm writing down 1396 to 1398. There's a small spot of 1391. And then a major support spot at that floor between 1386 and 1388.
Commodities is another area that got crushed yesterday after the news came out. And I know you liked gold and silver going into it, given second half dynamics. What are you thinking now? Well,
yesterday I got stopped out. And that's why you honor your stops. If you're on my virtual trade floor, you saw it disappear. I even twittered out that my level on silver, I believe, was 3170 SLV, because I was trying to figure out whether or not we have a bottom type of formation. And these take a lot of time. So you have to figure out whether you're short-term or long-term. So let's look at silver. With silver, okay, it looked like it was perking up, right? Here's the pattern that we've been drawing. And, I wouldn't say game over yet. Here's the left shoulder, the right shoulder, the head and the right shoulder is right here. So really, this 30 area is your line in the sand. But for me, since I'm a momentum trader, when I saw us not get above the high and close on the lows, I just got out because I'm not, married to this. And the same thing, gold was even worse. Look at gold here. Gold, you want to look at this pattern, which everyone's trying to still say 2000, 2000, 2000. So I tried to see if I could validate that. Look at this potent bar. This, I wasn't in gold, I was concentrating on silver, but if you were in this from a short-term basis, when you saw this line or this little accelerated trend get broken to the downside, or when you saw us take out yesterday's low, that was your short-term stop. Now for macro investors looking at this pattern, we get below this area of 158.13, and this breaks, then I think even the macro guy has to get out of the way, because this trend that started about a month ago on this potent down day never took back the top third, and now here's your continuation. So momentum traders should have got stopped out yesterday. Macro investors get out of the way, because if we close below this area, then you have this level down here, which is ways below.
In the sector spotlight, let's talk about retail, because this group has been strong for the better part of this year so far. And yesterday they took a dip back, but were able to come back. What are you looking at with this group? Because there's still a concern, the economic concern here.
Well, retail has been strong, just like some financials, just like the home builders and the leaders of what you want to watch. So when you pull back, you want to see if they change character. If you look at the RTHs, you will see that it's getting a little testy up here. You have two different trends here also. This is your macro trend that comes into maybe around 41, and then this is your accelerated trend. So if you're a momentum trader and you see us breaking below this accelerated trend, and you could be quick and witty and flexible, you get out yesterday because we broke it, even though we came back a little bit, and then this is the the level that you watch. And this level right here on the RTH is around 41.30. So if you sold yesterday, you have the opportunity of buying the dip, and then if this doesn't hold, that means the correction is getting that much more deeper. Then you have a level all the way down here where we broke out from. But I kind of think we hold this area versus getting all the way down to this area, but we'll measure the action along the way.
We have Bed Bath & Beyond reporting earnings today after the close. They've had sort of a strong trend in the stock price, but they're going to probably really need a good report tonight to see more upside. What do you think? What are the charts telling you?
Charts are saying it's pricing in a good report. So you're right. It's going to have to be good in order to continue. If you look at the chart here, I don't really trade this one, but it had some nice moves. As a trader, look at this wide range bar when it broke above resistance. That showed power. So that was a nice trade then. Since then, it's been trending to the upside. Here's your little reversal day, your outside day where we opened up higher, closing the lows, caused a little bit of a correction. Yesterday, a bit of a higher low. So I would say if you're a long-term investor in Bed Bath & Beyond, you hold some, but as a trader, I'm not taking this long or short. And your level here is if it starts getting below this 66 area, you then have 64 and then where we broke out from. So those are your levels, and it's going to be all about the report. Just know your time frame, whether you want to take it into the report.
Another home-related name that we need to talk about is Home Depot. Some great momentum in that stock. Can it continue?
Home Depot was my stock of the year 2 years ago, and since then it's just been trending and trending and trending, and people are trying to short it and fight the trend. The trend is your friend until it changes. Obviously, you've heard that many times. So at this point, it's always good to sell some into strength, but you could hold some if you're a macro investor. But if you look at this trend here, the chart, look what's been going on here since early October. Down in the low 30s, it's been following this trend of higher low, higher low, higher low, higher low the entire way. So at this particular point, stay with it until that changes. If you're a cute trader or you're quick, once it breaks below, just say this 49.90. Maybe the trend changes a little bit and you have a little corrective type action. So if you're riding it for an intermediate trend, you get out. Macro investors are fine, but I would say if we break this area right around here, you better be a little cautious because that means we could retrace. And I think that you have a nice level of support here at 48, but it could also see this 46 level, and then that would be an area where I think more macro buyers would come in. So trend is still intact. Just watch this area if you don't want to stick with it, if your time frame isn't that long.
How does that compare to Lowe's? They've also had a good run over the last.
I don't think you need to be in both of them. Pick and choose. Pick a group that you like. Pick 1 and 2 stocks. If you have too many stocks out there, you're not going to watch the action close. I think Lowe's is okay. It's the same type of thesis as Home Depot.
And just to round out the retail sector, we've got to talk about Lululemon. This has been a great momentum stock. It's been pretty impressive actually over the last year. It's a growth story.
Yes.
Can the momentum continue though?
A lot of people keep fighting that momentum, and it's been intact, and it's been a little faulty lately. This is a good stock for today because yesterday, even with the downside pressure, it closed on the high. So this will actually give me clues on whether or not we have a trend to the downside day or if some stocks can go positive. If you look here at Lulu, you'll see stock closed on the highs yesterday when the markets obviously were under pressure right near the old highs. So for me, I would say watch this even as a trader. If it's down 50 cents or $1, trade it for a cute negative to positive move, and then if it squeezes through yesterday's highs of 76.72, you're going to see some further action to the upside. So watch that for clues. I think Lulu will be, out of 12 stocks I have on the open, Lulu will be one of them.
That will be good news for you.
It could be.
We're going to take a break right now, though, and we'll be right back, though, with more on the financials.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Let's jump right on into the trenches with the financials. Today, the stocks have been pretty strong, but we've talked about this before. This is a group that you can be a little more choosy with. What are you looking at?
Well, financials have been leading the group. So as far as today's downside action in the futures, you want to see if can they go green, and can they help lead the market to the upside off the lows. Yesterday, I was talking in the Twitter sphere, I was talking about JP Morgan, which has been a leader. And yesterday, for most of the day, it was below the 10-day, which typically JP Morgan hasn't happened. So I tried to send the note to be cautious, maybe get a little lighter on the banks, because that could be a little bit of a character change short term. So if you look here first at the XLF, you'll take a vision here. It's been moving perfectly. Here's that wedge from December that broke to the upside. Then it consolidated with a nice channel. This is when Warren said he was going along JP, had a nice move out. And ever since then, it's consolidating again. But high-level bases are hard to trust because of the amount of traveling that it has done from here. So at this point, XLF gave back a little bit of the 10-day. I would watch this area. This area right here is 1547. If this were to hold, I think you see a little bit more sideways action before a bigger move, kind of like what happened here. But same way, if this does give way and gets, and doesn't hold this area for the first time in this trend moving higher, you could then see a retest of this breakout, and that would bring you to this 50-day moving average right around here. But obviously, this is support 1, and this is support 2. And you mentioned JP Morgan as being the leader.
Yep, it's best in breed bank. They have a lot of things going for them, and especially a turnaround on the economy they're just going to benefit from. It's up 36% year to date so far, but can it go higher? Was yesterday a good point to get in for longer term investors?
Well, a lot of people were saying buy the dip yesterday, and I was just like, why don't we just wait just a little bit? If this is the start of what could be a bigger move lower, even though JP Morgan is best in breed, it also could go lower at the market. So let's just be just a little bit more conservative here. So if you look at JP Morgan, you'll see stock yesterday was below the 10-day for a majority of the day before snapping back up. Today it's probably opening around the low, so watch this 44.97. Below yesterday's low, you then have a move to this floor here. This floor here is right around the 20-day, which we haven't seen that many times over the course of this rally. If you look here, it's been riding the 10-day moving average, okay, besides in this base here. So it can get to the 20-day. I say you'd be a little bit choosy here and wait. If you're looking to buy back JP Morgan, look towards this 43.80, 44 level for an initial entry. And if this were to break, you're going to see a bit of a deeper correction. And then I think you could buy this zone, which would be compelling for me. And right there, that's 42.90-ish. And 42.90-ish, I might even call my dad and tell him to buy some.
Oh, wow. Another bank that a lot of people like is Bank of America. You talked about it yesterday. They've been able to hold that 950 level. Where do you think it goes now?
Well, this has been something for psychology-wise. Everyone owns Bank of America, or a lot of people do in their 401k. It's been a good mover, a great trader this year. And it's been basing and going. We want to see if that continues. So Bank of America, to me, the line in the sand is 940. So you have to be kind of exact with these things. If you look here at Bank of America, you will see, 940, 950 is the zone. Here was the last time I was very aggressive with it. After you had your nice move from the beginning of the year, consolidating, going sideways, pow, above 815. Nice trade. Now it's trying to consolidate this move, and I tried to compartmentalize it where here's the upper end of the range, the lower end of the range, and it stayed in the lower end, showing some weakness. So now it looks like it's going to be opening below this 941. If it can't get back above it quick, you're going to see at least a move to test this 20-day moving average, which stands not too far below, around 923. But I don't think you rush into it here at 923. I do think that you could buy Bank of America a little bit below 9, right around 880. 880. I might not call my dad to buy it, but I'll be putting it probably in my swing account.
We saw Mastercard and Visa yesterday. They were both up in a down tape, so doing really well. But where do they go from here? Can they keep going up? Can they keep the momentum?
Well, this has been a great two stock group. Obviously, American Express is in the group with some others, but Mastercard and Visa we've spoken about so many times in the show. Just always showing relative strength, usually consolidating, making new highs, and it's very important actually for today more than other days because they were so strong yesterday in the face of the market weakness. So I'm going to watch it today because the good book said take them home long yesterday. So if in a normal tape they would be up. So with the tape being pressured, they're probably going to be down, so that gives a trader an opportunity to trade it from negative to positive. So if you look here at the chart of MA, you will see it closed near the highs of the day, breaking above what was the year high, which is always bullish. So at this point, it's probably down a little bit. So you want to see if you can go from negative to positive, trade through yesterday's high of, that is 440.60. If MA can't go positive, that means not even the strongest stocks from yesterday are getting a little love on the cheap. That means today could be that weak, and then you really have to get out of the way, and that tells you something about the market complexion.
The same goes for Visa.
Yeah, Visa hasn't been as strong as Mastercard, but they kind of like take turns. One goes and the other goes, but they typically move as a group. I actually concentrated on Visa yesterday. That was the stock that I was trying to be long. It also, this was the last time it broke out right above this. What price was this then? This was about 104.20. Nice move, consolidating it since. Yesterday it closed on the highs. I was buying it yesterday. It was hard to keep owning it as the market was so weak. I actually got stopped out during the Fed little shakeout. So closing the highs, right near the old highs here. This old pivot is 120.70. So this is the same type of situation. It should have opened up if the market was stronger. It's weaker, so you're going to get a little bit of a discount. See if it can go negative to positive. You see a negative divergence or a positive divergence, meaning the way you do it is, okay, futures open down, just say 11 handles, and Visa's down $1. Then futures go from down 11 handles to down 14 handles, and Visa doesn't go down at all. As soon as you get a little bit of a bounce back in the futures, you buy the Visa for a positive move. That's a positive divergence. That's how you figure out whether or not you can play something for relative strength. Combine that with the daily chart, and it could be a good trade today. If it doesn't show relative strength today and everything is weak, then you know the composure.
Why don't we do some quick hits? Apple, another name, they hit a new 52-week high again. They keep doing it. What do you do?
Well, a lot of people keep trying to call a top in Apple, and yesterday on CNBC all day long, all they want to do is compare it to the old winners of the past, whether it was Ciena, whether it was Qualcomm, whether it was JDSU, and obviously, stocks and patterns repeat themselves, but this I still think is different. I still think that the product line is robust. I still think that overall it's going to be higher. For today, another awesome gauge to see what the action's like. Okay, it's down $5. If they can't take Apple positive today and fill that gap, again, you'll know what today means. It'll mean it's that weak. So if you look at the chart here of Apple, you will see that it did close with a bit of a doji yesterday. Okay, so that means that it couldn't close back on the highs, but still green compared to the action. I would watch yesterday's low around 622.51. That's where I think it's opening. So see if it could fill the gap and hold this. If it can't hold this, the next prior pivot here was 621.45. And if it doesn't hold 621 to just say 622 and show some relative weakness, the 10-day moving average, which we've tested a few times, would be a real level to concentrate on, and that's around 612. So watch this area. This area can't hold, then this area should be buyable, because each time it's gone through the 10-day, it's been buyable during the majority of this move. So why not again try it this time until that trend changes?
How about Las Vegas Sands? They operate the Venetian and the Palazzo in Las Vegas, but the big story here is Macau. What do you like about the name?
I just like the trend. I like the chart pattern. I like the way it acts. It also acted yesterday very well. It closed near the highs. I'm long some. See if that can go negative to positive also. As a macro investor, I don't think you have much to worry about. Watch the 56 area. I think that's your area to trade long against. And if it starts to go positive today and the market regroups, I will add to it above 59 to 59.5.
BIDU. We've talked about this one before. It's trading below its March 26th high. Analysts are looking for a price target of almost 190. What are the charts saying?
Charts have been acting much better ever since it broke above that downtrend of 140. Short term, it's trying to hold to 144. If you look here at BIDU, it's also a candidate to probably go green. If you look here at the chart, last time we really focused on it was right when it broke this downtrend, right around this 140, hit resistance around 155, short-term top. Now you have a little bit of a box here. So it's going to be down a little bit. See if it can go positive for cash flow and trade it long versus 144. If it holds 144 in the midst of this correction, you're going to see higher prices. But if we break below this, you can see a retest of this prior breakout, which is right around 141.50 to 141.82, which is where the 20-day is as well.
Monsanto, they're out this morning with earnings. This is a stock that is supposed to benefit this quarter from higher corn prices. So what are we seeing in the charts?
A lot of people are talking about a second half move in the ags, which it could happen. The fundamentals supposedly aren't, reached yet, or traders aren't, or analysts aren't saying what they should be saying. For me, the charts are saying they're tricky, they're sloppy. I tried to be long pot yesterday, I tried to be long CF, and I got stopped out both times. If you want to look at this group, Monsanto's been acting better. I don't know what the results are right now. They might be out. So this is something to watch for today. If they came in well and they opened up, if you look at the chart here, this is a spot of resistance. If they weren't in line or they were lower. Typically, they do buy back the ags sometimes on bad reports. So here's your support. So here's major support. Here's your resistance. And then other leaders in that group real quickly, CF, trying to break above this 191. I think it would be healthy for this stock. POT looks okay. I tried buying it yesterday. It didn't work. If it starts getting above this 47.50, 48, it can go. This is your support there. So, at least you have defined lines in the sand, support, resistance. For me, as a trader, it's been a little bit more difficult. That's why I haven't been as active there. But if they start acting better and they get better the second half of the year, I'll put them more on the game plan.
LinkedIn, last week got 2 upgrades. There's some insider buying. It's above $100.
I liked it.
You like this?
I like it. I've been trading it. I think this has higher prices this year. As a macro investor, I say there's typically 8 to 10 stocks you could own that act well. This is one of them for this year. I'm long it right now as a trade. I'm going to see if it can go positive. So if it's down, just say $1 and change with the futures, same type of concept. If the futures go lower, we go from down 11 handles to down 14 handles, and LinkedIn is down $1.30 and stays only down $1.30. Maybe they try and fill the gap. You can get some cash flow and you could stay with it on a macro level. So LinkedIn is something I'll watch to see if there's any kind of relative strength. Real quickly on the chart, it's doing some work above this 100. I would say from a short-term level, I will stay with this. But if it starts to break below 98.50, I'll revisit it at another time, perhaps at this moving average or later this year. So as long as it stays above this 98.50 short-term, I think the complexion is strong. And I do think that at some point this year, these highs will be taken out.
So the key today really is to watch the leaders that we have seen and see if they can go higher, and then base your position off of that.
I think the key to today is knowing your time frame. Okay. Knowing if you're a short-term momentum trader or an intermediate trend follower. For me, since December, I've tried to be long 10 to 12 positions, ride the trend. Last week, I got rid of most of them, and I've been more flexible this week, thinking that we could switch gears into the second quarter. So if you're a momentum trader that trades professionally, perhaps you can make some money from the short side and be a little bit lighter. As a macro investor, though, the trend is still intact, and don't get scared. Don't start selling your stocks, especially if you're not going to be able to buy them back. And we'll see what type of action we get today. If it's a trend down day and we close lower than today's open, I think IBD is going to put us back in a market correction. They went to market under pressure last week, which was the first time they've done that since December 20th when they put us back in a confirmed rally. So to me, that got me a little cautious. So today, they can save the market and we go into market correction. That means the trend could be to the downside for the next month, 2, 3 months, who knows. So that means you stay out of the way, you put together your watch list, see what acts best for when we resume, because I don't think the highs of the year are in, but short term, we might have more pressure.
And the biggest thing I think to look forward to is Friday's payroll number, right?
It is, and none of us are going to be at work because it's Good Friday, so that'll be interesting. Yeah. And if you want more, today, tune into the recap. We'll talk about the action, and we'll have some more data to go over, how to move forward the rest of the week. Have a great day trading.